Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to do. Well, as we've been seeing over the past week, you've been watching, we went on quite a wild ride up to the top, and then the last couple of days of the week, it started to take a bit of a dip down. But essentially, as I always like to look back over time, basically over the last 3 weeks, we've gone nowhere if you look at it that way. But volatility is starting to tick up, and as volatility based traders, we love that. So the S&P 500 is 32 right now, seems to be kind of in the middle of a bit of a range, let's say, but volatility is decent. And the Nasdaq always looks fairly similar, same story, went up, last 2 days came down, volatility spiking again, but here you can see instead of 32 it's only 22. And then the Russell, which has been much more of a downhill slide for the last few months, volatility is decent up there as well, but even here it's only 27. So the S&P 500 right now is the highest volatility. So what are we going to trade today? Well, we're actually going to look at gold, because gold has been on a crazy ride in the last week. Look how much it shot up. Went from 168 all the way to 178. Doesn't seem like a lot, but if you do it on a percentage basis right here, if I go up to there, you can see gold's gone up 7% in 9 days, counting the weekend. So basically in the last week, gold shot up 7%, which is a lot for gold. And you can see because of that, volatility has gone way up. So unlike stocks, commodities being gold, oil, silver, those kinds of things, those are commodities, they're the reverse of what stocks do. And so what I mean by that when it comes to volatility, well, generally speaking, when stocks go down, like here, volatility goes up. But in commodities, it works the other way. Don't ask me why, but when the price goes up, volatility goes up. So it's the exact opposite, generally speaking, in commodities. And gold has shot up, so volatility is super high. You can see it's way up here at 72. So what am I going to do? Well, if you've been following along, you know I'm a contrarian. When things move up this fast, this far, this fast, I generally seem to think it'll slow down and start to turn around over the next 45-ish days. And that's the trade I'm going to make. So if we go to a trade page, I go as close to 45 days as possible. Tomorrow this will be 46, which is perfect. I'm going to sell a call vertical, which means I want the stock price to go down over time. So I start by going to the strike price just above the stock price, which is 179. So if I sell the 179 vertical and then make it $1 wide, you can see I collect 47 cents. But that is not good because that does not fit our rules of 33 to 40 cents per $1 width and strikes. So this is $1 wide, this is 47 cents. That is not between these two numbers, it's too high. So what I'll do is I'll go further away. I'll change 179 to 180, 180 to 181, and you can see now it's perfect. Now it fits our rules. Now why do I do that? Why don't I just stick with the 179? Because when I collect less money, my POP, or my probability of profit, goes up. So in this case, shorthand kind of way of looking at probability of profit is we take the max loss, which in this case is 60 cents, because remember it's $1 wide. We're collecting 40 cents. Max potential profit plus max potential loss always has to equal the width of the strikes. So max potential loss plus max potential profit has to equal $1. Shorthand for working out probability of profit is we take max potential loss and divide it by the width of the strikes, which means this is a roughly 60% POP trade. And that's why we like to collect a little bit less, because if this was 50 cents, this would just be a 50-50 trade. I don't like that. I want to have a better chance of winning. So by moving further away, my chances of winning go up. I collect less money, which means I risk more money for the trade, but that's how I trade. I risk more to make less because that means my POP is always over 50%. So assuming everything stays the same in gold tomorrow, We will go and try and sell the 180, 181 call spread for between 33 and 40 cents. If you're collecting too much, you'll move further away. And that is our trade in gold and why for tomorrow. So what is your goal here? Well, mine has always been to get to where my money makes more money than I make. Let that one sink in. Look, I'm just a regular guy with a full-time job, but every day I get home, I look at my trading account and I see that I have made money while I was actually working full-time all day. Now, wouldn't you like to see that too? That your money made you money while you were actually working? Well, you're never going to get there until you actually start. So don't you think you'd be a little bit more comfortable and confident if I was right there by your side making trades with you? Where now I will be there with my real-time alerts. You'll trade side by side with me in real time as I tell you what trade to make, why we're making the trade, and more importantly, how to make the trade correctly. But making the trade's only half the battle. When to close the trade is just as important, so you'll get those closing alerts as well. Listen, you've got the knowledge now, so let's put it to use. So how do we turn your knowledge into actual income with as little risk as possible? Well, the way we do that is by offering up the option alert for only $1 for the first month. Now, the option alert itself is going to send out 2 to 3 trades in real time as I make them via text or email directly to you. And as I close these trades, you'll also get those closing alerts in real time as well. Now, if you want an even better opportunity, the Option Pro, which is the exact same alert service as the Option Income, offers up all the content I've ever made, courses, webinars, etc. Over $2,000 worth of options courses for only $19 for the first month. So the way we're going to sign up for either of these is by going to sharpertrades.com, clicking on the products section. Both of these alerts will show up. Depending on which one you prefer, you'll type in these coupon codes and you'll either get the option alert for $1 for the first month or the Option Pro for only $19 for the first month. Look forward to seeing you all over there soon. Take care.